So throughout the past 40 days, the SPY has been consistently reversing at every single gap. For those of you who watched last night's video, you're well aware I was interested in buying call options towards that lower gap. That was one of my levels of interest. I did end up trying call options once before that. That trade did not work out. But in terms of the second trade, I ended up buying call options once I noticed there was a 30-minute candlestick trend reversal confirmation at the gap level. And surely enough, the gap close reversal trading strategy ended up working out once again. The 596 SPY calls that I ended up buying at 40 cents went all the way up to 220 cents plus a contract within just 2 hours. That's over a 500% plus potential profit return using the gap close reversal trading strategy, buying cheap, low risk, far the money option contracts. I'm going to be breaking down the overall trades that we ended up making on the day. First things first, let's get into the money making game plan. So based off of what I'm seeing, I want to bring some awareness to this once again in terms of the weekly chart. We're comparing this weekly pattern to the recent weekly pattern. You could see right here, we have this green weekly candlestick. We have this green weekly candlestick. Then we have two slanted red weekly candlesticks slanted to the right side. Then we have two slanted red weekly candlesticks slanted to the right side. Then we have this big green bullish weekly candle. Then we have this big green bullish weekly candle. In terms of the next week, which is what we're looking at right now, you could see there was a small drop, and then it ended up having a strong bullish weekly closing candle. So in terms of the overall levels and how this candlestick looks, the bulls are still in this for a potential strong bullish closing week. But in order for it to actually happen, the SPY needs to maintain above $594. As long as we are maintaining above $594, the SPY will be on track for a strong bullish closing week at all-time highs. However, if we start to go under the 594 level and it cracks, spikes back up, forms lower highs, reacts bearish, then that means that the bears are gaining full control and it's unlikely to have a strong bullish closing week. So in terms of the bulls, have that chance at a strong bullish closing week, they simply need to hold above 594. Based off of this weekly pattern that I'm looking at, I wanted to bring awareness to that because that is going to be the make or break level. That's really going to help determine on where we're going to close into this week, whether it's going to be a strong bullish closing week or a bearish overall closing week, right? But as long as we're holding above 594, the SPY does have potential to flip this weekly candle from red to green, closing it at $600 or above. So just wanted to bring some awareness to that. Now, in terms of what I'm seeing on the daily chart pattern, right? So what I did was I went back throughout the chart history and I've studied the pattern. So the main pattern was two slanted red candlesticks, right? So in terms of this overall pattern, this is what I've seen. I went back throughout the chart history. I studied multiple times how it's reacted. So I want to get this out of the way. If the SPY is having a big gap down, so if we are opening up lower than 595, if we're gapping down like 2 points, then the main play I'm seeing is going to be to try to buy put options at the following levels. So again, this is only if we're having a big gap down below 595 for this to be relevant heading into tomorrow for the day trading opportunities, right? So the previous day lows. The previous day lows are going to be at 594.40. If we're having a big gap down, opening up under 595, I will show some potential interest to potentially buy put options at 594.37. And then the next level above that for puts would be that 596.90 for another gap reversal, right? Just be aware in terms of the past 40 days, every single fucking time the SPY has been, whether it's gapping up or gapping down, it's been reversing at the gaps for the short term. That's why you need to be using the 30-minute candlestick confirmations at the gaps. Whenever we're having these, bigger gap ups or these bigger gap downs, it's been reversing very, very rapidly throughout the past 40 days, right? You can see right here, this was the level I gave you for calls right here at 595.50. That was one of the levels. You guys are well aware the gap reversal trading strategy is the best, and this was the most oversold level, the lowest level I gave you, right? I played calls here. They went up 500%. I literally got into the exact lows using the gap reversal trading strategy. I'll be breaking down the 30-minute candlestick confirmation towards the end of this video, teaching you how I did that. But anyways, man, in terms of the daily chart pattern, now that I got that out of the way, if we are having a small gap down, opening up flat, or just a small gap up in general, the main play is going to be buying dips, man. So in terms of what I want you to understand about buying the dips, it's not going to be easy. It is going to be a little bit difficult. So you're just going to need to wait for things to play out a little bit and wait for strong 30-minute candlestick confirmations, right? But in terms of some levels that I do want to bring awareness to, like some make or break moves, where just, big moves are going to potentially happen in. If we're opening up flat, small gap down, or gapping up, another thing I want to add is if we are gapping up, focus on call options for a gap and go at the upper higher levels. So if we're gapping up, play the gap and go, break out and retest. Look for breaks above resistance levels. Once the SPY drops back down, testing those previous resistance levels for the first time to retest, you're going to want to be buying call options if we're gapping up, right? So in terms of levels that I want you to be aware of, 594, that's your make or break support. This like 594 is your make or break support. Next level under that is going to be 592. Next level under that is going to be that gap reversal play, 591, phenomenal levels for calls, right? But in terms of if we're just having a small gap down, opening up flat or gapping up, these are the zones that I really want you to be aware of where the massive moves are really going to happen. So in terms of like how the chart is breaking down, let me bring some awareness to this. You can see right here, there's some support on the 30-minute chart at 598.50. The support cracks, the SPY has a massive move to the downside, and then it reverses at that gap. So the SPY is attempting to have a gap reversal. And then it starts to spike back up towards that previous support. You see the previous support right here, previous support right here, spikes back up, forms lower highs, starts to drop back down. Now, the previous support where it had the massive move to breakout was right here, 596 to 595.80. So the SPY cracked support, it had a big drop. It reversed at the gap. It spiked back up. It tried to form lower highs, turning this previous support into resistance. That's the bears trying to maintain control, but the bulls are also trying to maintain control by reversing it at the gap, right? So what I want you to understand is the SPY is attempting to form lower highs, but for the bulls to maintain in control and really try to push this up, it's going to try to bounce first at this previous overall support, 596, 595.80, break and retest, to then spike back up to 598. And then 598 is where we can potentially see a drop first, because that's the previous support to react as a resistance, right? So if you just look at this overall trend, look at this overall pattern, this green candlestick right here and some support, this green candlestick right here and some support, cracks support, bottoms at this previous resistance, previous support right here, reacts to support, spikes back up, goes to 598, could potentially drop first. So what I'm explaining to you is we can potentially bounce first at 595.80, and then we could spike to 598, and then we could start to drop back down. So it's a true battle, but in terms of like levels, is going to try to bounce first at 595.80, and then it's going to try to drop first at 598. And then in terms of just overall price action, this is just measured moves, right? You can use this information to your own advantage. But this is just basic, in terms of price action, you can just see right here, big moves will be occurring at the following levels. You can see right here, 597. This is where massive move occurs. Price quickly goes up from 597 to 599. So price quickly spikes there, right? So that's a make or break level. 597 is make or break. 598 make or break. You can see 600 massive level. 595.80 massive level, 594 massive level, and then in terms of any levels below that, 594. So those are all the main levels where you need to be studying, and you need to be using those 30-minute candlestick confirmations that I've been teaching you, along with, in general, just the information that I provided to you. So in terms of the main levels, I did provide to you that it's likely going to try to spike first at 595.80. It's likely going to try to drop first at 598. So that's what I have to say in terms of a day before in advance. And then I gave you the information, so if we gap up, focus on breakout and retest plays. Study where the SPY is breaking above a resistance level for the first time, and then when it drops back down to retest, buy calls on the overall dip, right? If we're opening up flat or having a small gap down, focus on call options towards the levels, right? So in terms of like make or break levels, these are going to be your make or break levels. You can see right here, these are all make or break levels. If it's a small gap down, opening up flat, these are your make or break lower levels to focus on. 594, 595.80, and 597. Those are all levels. Small gap down, small gap up, opening up flat, focus on dip buying towards the lower levels. If we're having a gap up, focus on the breakout and retest strategy. In terms of measuring levels, you can see 594, quick move to 597, right? 597, quick move to 598. 595.80, quick move to 597, right? Those are all the levels. That's what I wanted to explain to you. Those are the levels that you need to be looking at heading into tomorrow. Another thing, when the SPY does get back to 600, that's going to be a good opportunity to look for put options. Use 30-minute candlestick bearish confirmations at 600. Also, if you're seeing a bearish reaction at 598, you can attempt puts. So in terms of levels to attempt puts, if we're gapping up, opening up flat, not having a big gap down, 598 for an initial rejection and 600 for an initial rejection. Scalp those plays, set profit stops, sell the moves. You should go green using those overall zones, using those overall levels. That's where the massive moves are going to be happening. Make sure you write down all that information. Now, in terms of the overall trades, let's get into this, man. So we had some massive wins and we did have some L's, but the wins, they definitely outweighed the overall losses. I'm going to be getting into this, man. So in terms of the trades, let's get into this, man. G-Roar, he absolutely crushed it today, man. He had 2 trades on puts that went up multiple 100% profit returns, man. I'm telling you, in terms of the morning trades, you're not going to be able to find any better trades than this, especially in the morning, man. It's truly fucking amazing what you can do with options trading in the morning. The first 30 minutes can go completely against you, and you could be down 30 to 50%. But if you hold, it can go up multiple 100% profit returns, man. So look at this. We ended up buying put options at market open. We ended up buying 597 SPY puts for 62 cents a contract at 9:31 a.m., right? So on the 597 puts for SPY, we ended up getting in directly at market open. As you can see, as soon as we got in, these puts quickly dropped to 40 cents. We don't use stop losses. The contracts are so cheap, so low risk that we can put in our entire position size as our max risk per trade. Meaning the most we lose is our max risk per trade, risk management 101. So with that being said, these puts literally dropped 20 cents very quickly. But in terms of the morning trades, you need to understand the first 30-minute candlestick, the market can flip, it can chop, it could trade sideways, it can go up, it can go fucking down. We have the whole day for the trend to go within our favor, right? So you just need to hold the overall trade, man. The morning trades are going to be the morning trades, and then especially like those power hour trades, especially the morning, man. Those are like the best ones to literally just hold the fucking play, because that first 30 minutes, if you're getting in directly at market open, that first 30 minutes lacks a lot of relevancy in the overall direction for most of the time. But you're going to see, man, this was a fairly good entry for those of you who held the play. 62 cents to 267 cents, right? So that's nearly a 400% profit return from our entry. And we literally got in towards the exact lows. That was fucking amazing. So with that being said, that was a phenomenal play that you could have taken advantage of on puts. I'm telling you, the percentage gains are always going to outweigh the percentage losses, especially if you leave runners and hold the overall trades. So with that being said, that was a phenomenal trade on puts. Now, in terms of, more trades, so 590 calls, that one didn't work out. But in terms of puts worked out once again. 12:20 p.m., 595 SPY puts for 38 cents a contract, right? So we go to 595 SPY puts, 12:20 p.m. You're going to see we bought these puts towards the exact lows, right? So we're in right here. You can see they went from 40 cents quickly to 25 cents. Again, we don't use stop losses. And then they went to 122 cents. So that's a 200% plus potential profit return from the entry. Right now, in terms of my overall trades, let me break this down here for you. So my first trade on the day was an L. I tried SPY calls once. It did not work out. In terms of the second trade, you could have potentially made over a 600% return on this. So let me break this down, man. I'm going to be explaining to you the trade on calls. So in terms of the trade on calls, you're going to see right here, I ended up buying 596 SPY calls at 42 cents a contract at 1:04 p.m., right? So who do you know is buying 596 SPY calls at the exact lows? This was the second trade that I made on the day. The first one on calls did not work out. The second one went up over 600%. So like I said, man, this is a numbers game, right? One trade doesn't work out, next trade goes up 600%. So in terms of this overall trade, this was phenomenal, man. The entry is fucking everything, man. If you get in towards the exact lows, the entry makes all the difference with the massive percentage gains, right? So we bought these calls literally at the lows, 596 SPY calls at 1:04 p.m. using the game plan that I gave you last night, man. And I know the game plan had higher levels to buy calls. I did end up trying calls once before that, and it didn't work out. It wasn't the best confirmation, and it wasn't the best level, but it is what it is, because the second trade was at the exact fucking lows, and it went up over 600%. So with that being said, in terms of the confirmation, I've been telling you throughout the past 40 days, you guys are well aware of the unique trading strategy that I've created, the gap close reversal trading strategy, right? I told you, you need to be playing calls at the gap. This is the lower oversold level, right? You can see there was a gap to fill below right here at 595.61, right? In terms of when I started to buy those call options, I bought call options on the opening of this 30-minute candlestick when it was red, ugly, and bearish before it flipped strong, green, and bullish. I literally got in at the exact lows. So in terms of my level for interest for calls, it was at the gap, 595.60. If there's a bullish or a trend reversal 30-minute candlestick lower than my level of interest for calls, that's even better. SPY's even more oversold. So what was the confirmation? This was the confirmation. So in terms of this candlestick, when it is at a key support level that has not been tested, when it is at an overall gap, the SPY tends to have a short-term reversal. This is what the candlestick looks like, right? So it needs to be placed at an oversold gap like this, or it needs to be placed at a key overall support level. I'm setting you up with some foundations to use this 30-minute pattern at, so you can write this down and write this down. You could draw this out visually as well, so you know what to look for, right? This is the candle. It has a small red tip and a small red tip, right? So it has this like red, it's this big red bearish middle candlestick. This is what it looks like, right? So we're going to compare this candlestick. You could see this looks similar in a sense, right? But just compare this to what I said. Key support that has not been tested or a gap that has not been filled, right? So the gap is right here, the gap build, 30-minute candle close like this, confirmation of buy calls on the opening of next 30 minutes for a strong bullish move to the upside, right? Now I'm going to go back throughout history and I'm going to show you, okay, so here we are. This is key overall support on the SPY that has not been tested towards 570. This candlestick forms, right? And then you can see it starts to have a bullish uptrend. Next 30 minutes is green, buy the dips when it looks red and bearish, right? If we go further back, you're going to see many times that pattern has worked successfully. It's just you have to use the patterns at the proper foundations. Now, I'm going to go further back and I'm going to show you more situations where that pattern did end up working out. So make sure you remember that candlestick, and I did end up highlighting this. Okay, so here we go again. You're going to see right here, there was a gap to fill below on the SPY at 582. You see how it gapped up? It opened up higher than the previous closing price. Look at the candlesticks. This candlestick right here, nearly towards the gap, previous resistance reacts to support. It drops next 30 minutes, bullish, buy the dips, bullish, right? Here's the same candlestick. The same candlestick I just showed you closes towards the gap, previous resistance react bullish, previous resistance to react to support, breakout, retest, strong support, next 30-minute candle, bullish, right? So you see, I remembered all this. I didn't even have to go back throughout the chart history. I remembered all this because I just remember how well that pattern has been working for me. And if you go back throughout the videos, you're going to see me talk about the same overall patterns, man. So pay attention to that red bearish candlestick at key support that has not been tested or at gaps for gap reversals. Here it is again. Same exact candlestick, key support, key bottom wicks. Next 30 minutes is strong and bullish. You're going to want to be buying calls towards the previous 30-minute lows on the opening of the next 30-minute candle, right? So I showed you many situations on how well that pattern has been working, throughout the past like 90 days. And that was the main reason for buying those calls. So I ended up buying those 596 buy calls as soon as that 30-minute candlestick started to drop, opening up red and bearish. And as you could see, we literally got in at the exact lows. Do you remember the trades where I recently showed you I was buying calls literally at the exact lows? Well, here I am doing it again. On the second trade of the day, I'm buying at the exact lows using the unique gap close reversal trading strategy that I've created, making losing a personal choice. The first trade didn't work out. It wasn't at the best level, and it wasn't the best confirmation. The 30-minute candlestick confirmation was not the best, but I wanted to take the trade. I wanted to give it a shot. But this just goes to show you, man, the gap reversal trading strategy is truly the best. It's been working phenomenal throughout the past 40 days. Another thing it goes to show you is if you are not green on your account throughout the past 2 months, that means that you're over trading. That's one of the reasons why you're not green. You're simply over trading and your position sizing is off because the gap reversal trading strategy has been working every single time throughout the past 40 days. So if you were to just trade less, you would make less overall gains, but you would be green and the time would add that up with compounding the account, right? So another thing to focus on is high quality setups, compounding the account and trading less. Like I said, if you haven't managed to stay green throughout the past 2 months, then you're just overdoing it and you're not using and simplifying it with just the best strategy, the gap reversal trading strategy, right? So simplify it. If you're not going as green as you want to, or if you're not green throughout the past 2 months, Simplify it. Use the best trading strategies, trade less, and let time work in your favor. Let time give you the gains on your account, and let compounding give you the gains on your account rather than trying to trade more. That's one suggestion I would have for you if you are not green throughout the past 2 months. Because, like I said, if the strategy is working every single time, the gap reversal trading strategy throughout the past 2 months, then if you just use that overall strategy, you should be green. And since you're trading less, that's less gains. But you compound the account and the time will do the work for you along with the compounding, right? So I just want to bring some clarification to that. You're going to see a lot of professional traders. They tend to make a lot of trades. A lot of professional traders, they'll typically make, I would say like 2 to 5 trades a day. It ranges. But if you're just not profitable making that many trades, trade less. Just do like 1 or 2 a day in that situation, right? Try to get it to like around, I would say like 20 an overall month, 20 to around 20 trades a month, right? If trading more is not working out for you, then trade less and trade just the best setups, right? In terms of professional traders, they really like to push their limits and they will look to trade more at times, whether that's like, 2 to 5 trades a day on average, say like 2 to 3 trades per day on average. So I bought these calls at the exact fucking lows, right? 42 cents a contract right here at 1:04 p.m. Who do you know is doing this, man? You understand? We're in at the exact lows. So in terms of this overall play, man, it was fucking amazing. I quickly made like 60% on that. And I made it very clear to leave some runners because it just made sense. It was oversold. It was the gap reverse trading strategy, and the 30-minute was going to close green. So this is where we got in. The low of day was right here at 30 cents. And then this is where we got in on that overall trade, 1:04 p.m. We literally got in at the exact fucking lows. Who do you know is doing that, man? This is the power of the unique trading strategy that I've created, the gap reversal trading strategy. You're going to see on my channel, it's like that most viewed video is literally me teaching you the gap reversal trading strategy, man. So anyways, I bought these calls towards the exact lows and they went all the way to 240 a contract. They went from 30 cents to 240. That's over a 600% potential profit return in literally just an hour and 30 minutes, man. So every single 30-minute candlestick was green and bullish. One way to maximize returns when you're in a best setup. This was clearly obvious that it was a potential best setup because the price has been reversing all the gaps and there was 30-minute confirmation. But in terms of one tip I can give you in terms of maximizing that, if the 30-minute candle closes strong and bullish like it did right here, is going to try to keep on running. And I did make it clear the profit target was at 596.50, right? So for those of you who left runners and held for the profit target, big shout out to you for leaving the runners, right? I'm telling you, in terms of trading, the hardest part about it is truly the exit. The hardest part is figuring out where to exit. But one tip I can give you with that when you're holding for a bigger win, if the 30-minute chart is closing green and bullish and it's a great setup, just keep on holding the calls, set the profit stop, move the profit stop higher, and basically once the 30-minute candlestick closes red, just close out the entire position. But you may have been profit stopped out already depending on how high you moved up the profit stop, right? But one tip I can give you is if you're trying to just hold it out, as long as that 30-minute chart is just maintaining green and bullish, closing green and bullish, it's just going to try to keep on overall pumping, right? And then once it closes red and bearish, then you either get stopped out for profits or you just cut the play when it closes red and bearish, right? That's one tip I can give you. It gets a lot more advanced than that. You can also say right here, this was key support on the 30-minute chart at 598, spied a massive drop. So if it spikes back up to 598, it could potentially drop, right? Which is why I alerted puts during the power hour trading session. If you would have held that play, it would have been a phenomenal play. But some people didn't hold and ended up being a loss. But overall, man, I would say this was a decent day. The gains definitely, the percentage gains definitely outweighed the losses, but we did have some L's. But it is what it is, man. We had phenomenal trades, especially if you just held the trades, man. Like we had some people hold them. I saw in the chat, some people were saying they made $500. Some people were saying they made over $1,000. So, yeah, man. And like I said, not all the trades, were green on the day. I had a YOLO on puts, it didn't work out. But if you held the puts, they went up 100% plus, right? So, the toughest part about today was the holding. That was the toughest part, was just holding for the overall bigger gains. But for those of you who did hold longer, it should have been phenomenal, man. Like I saw some people in the chat on $3,000 profit, $1,000 profit, $500 profit. But yeah, man, I'm gonna be signing off. Those are the main plays. For those of you who are serious about making money and trading alongside with us, is the first link down below within the description. If you'd like to surround yourself inside of our secured private organization, right? We have 2 multimillionaires learning their trades in real time as well. So big shout out to Uncle Tio, Keaton Win, Forbes 30 under 30, man. Big shout out to him. He absolutely crushed it, man. Let me walk you through this here real quick. He called out a swing trade on Tesla yesterday. Take a look at this, man. It's already up 35%. This swing trade, that is plenty of time. I mean, that's massive gains considering how much time it has. December 20th there. But anyways, in terms of this trade, man, this was phenomenal. He called out a great swing trade. Uncle Tio, Keaton Win, Forbes 30 under 30. This guy's been on an absolute tear, man. All he's been doing is alerting W's, man. He called it out yesterday within the chat. Big shout out to him, man. This was the play. The game plan is to buy 315 Tesla puts and 290 Coinbase puts. December 24th expiration. The fucking puts are already banking. He's already up 30% on those Tesla puts, man. So with that being said, man, if you're serious about joining our group, it's the first link down below within the description. We have many members who are making $500 a day. Some are making $1,000 a day. Some are making, 5 figures a week. We have some members making 6 figures a month. We have 2 multimillionaires in here. And in terms of what we have a 0-day options trade alert system. So just to give you some background to the 0-day options trade alert system, we're known for buying cheap, far low risk, far out of the money option contracts. And in terms of the system, these are the biggest percentage gains within the market. The contracts are so cheap, you can literally put in your entire position size as your max risk per trade. And the way we're still able to make great money on that, since we're not risking a lot, right? Just a couple % of your account, is because of the leverage options give you the percentage gains, right? These are the biggest percentage gains within the market. We hold our trades for longer periods of time. We don't need to use a stop loss. Our max risk per trade is our entire position size. It allows us to remove the stop loss and hold for the overall gains. We have the entire day for these contracts to go in the money and make massive percentage gains, man. So it really doesn't matter if a 30 minutes doesn't work out within our favor, unless we're just trading that last 30-minute block during the power hour trading session, right? But anyways, man, we're known for holding for massive wins. We're known for having the biggest percentage gains within the overall market. We're known for having the highest win rate in the game with this unique trading style, this unique trading system. And we're known for setting profit stops. We set profit stops to ensure that we do not go green to red. We move the profit stops up higher to ensure that we don't get back the bulk of our gains, and we sell the moves. That's just some basics. And we're doing this with 0-day options only. And we're known for buying cheap, far low risk, far the money option contracts, selling deep in the money for the biggest percentage gains. And like I said, we're not using stop losses. And we add to winners. We set the profit stops. Adding to winners increases the winning. When we're up like 5, 10, 20%, small win in our favor, we like to add to winners because it tends to go up multiple 100% profit returns when we are right on the trade, right? And another thing to add is when we're in a dead play that drops like 50%, if we choose to hold and not cut for an L, not sell for a loss, it tends to go in the money and it tends to go up over 100% plus, right? So holding the dead plays and removing the stop loss, in my experience, 70% of the time, it tends to work out when we decide to not sell for a loss, right? So for those of you who are serious about making money, it's the first link down below in the description if you want to experience something real trading alongside our amazing community, our amazing secured private organization, right? So we will see you guys tomorrow within the chat. If you would like to join us, it's the first link down below within the description. With that being said, I will see you guys tomorrow.